Hello and welcome to Insurance Business TV for our regular property insurance power panel. We're going to take a look at some of the nuances that separate the residential and commercial property insurance markets and also the current challenges facing brokers. We've assembled our experts. We've got Jodie Geraghty. She's an account executive with WTW's Corporate Property and Casualty Division in Brisbane. And Melissa Jolly is Managing Director of Pinnacle Insurance Brokers and based in Perth. Welcome again to you both. Thanks for coming on board. Melissa, let's start with you. Like we often do, we get a bit of a quick insurance market overview. How is the commercial property insurance market looking from where you sit right now?
Yes, well, hello again. Great to be here. So good news, the market is softening or is continuing to soften across most of Australia, and good news, WA is no exception. Premium growth has slowed, and there's also more competition for well-managed risks, particularly in metro and lower natural peril areas. That being said, as always, the high risk or catastrophe exposed properties are still facing tighter terms and limited insurer appetite. In WA, that's kind of above the 26 parallel, where we've got the cyclones and in summer months, the bushfires.
And Jodie, is it still softening from where you sit?
Hi, Danny. In Queensland, we've been seeing a softer market, especially with large corporate clients. Insurers have been hungry for business and asking us for opportunities to quote, which has then also put incumbent insurers on notice to ensure they are competitive on their premiums and terms. Where clients have natural catastrophe exposures or high risk exposures, they come with their own challenges, which haven't disappeared. Insurers are still cautious to ensure they understand the risk and mitigation practices of our clients. But even on those more challenging risks, there has been more room for discussion and negotiation with insurers than there has been in past years during the hard market cycle.
Thanks for those answers. Jodie, let's stick with you. And then this is a question that often occurs to me when I'm writing about property insurance, because the figures we get and the discussions we have often lump commercial and residential property insurance together. But I'm just interested to know from your perspective as a broker, I mean, what are the nuances that brokers need to understand about the differences there?
You're right in that we work in the commercial space, not residential. However, a lot of the education and risk mitigation practices that we share with our corporate clients can translate to the residential market. Elements such as declaring your insured values correctly and the importance of doing this are the same, so that you're accurately insured and not at risk of underinsurance in the event of a claim. Or risk mitigation, such as performing regular trimming of trees to mitigate the likelihood of a branch crashing through the roof during a big storm. These are things I think about even with my own house. Something I'm appreciative of as a corporate insurance broker is that the larger clients usually have a bigger premium pool and often have a spread of where their assets are located. And so there's a greater negotiation power for the premiums, terms, and conditions. I don't believe you have that same ability in the residential space.
And how about you, Melissa? How do you see the nuances between the two?
That's a totally great point there. We do hear a lot more about the residential, mishaps or things that go wrong because it is people's personal income, whereas businesses, they do tend to potentially have backups in place. But notwithstanding, in terms of the link between the two, they are quite closely linked. They're both property. Both sectors do draw on the same construction resources, land supply, planning rules. So the same principles do apply there. There is a lot more pressure in the residential space, and similar to Jodie, I do tend to focus more in the commercial space. But you do hear about the labour shortages, because I do work with a number of construction clients who build residential properties. Labour shortages, rising building costs, and also that exposure to the natural perils that we're experiencing. It does also flow through to those commercial developments as well. So brokers do need to understand these connections between the two. Over here in WA, we're a little bit further away from everything, so sometimes we do have those greater supply chain delays, any rebuild costs, inflation, also zoning changes. That's something we have been seeing a little bit more recently as we're growing outside of, I guess, the Perth CBD into those more regional areas. This can affect the commercial valuations, sums insured, but also timelines for building.
Since we last spoke, we've had the busy June 30 renewals period. Have either of you seen changes from insurers to the sort of property policies they're putting out there? Melissa, could we start with you on that one?
Very glad that June 30 is over. That's for sure. It's always a big burden each year. We have seen slightly more flexible pricing from some insurers, have also had a bit more approach from the London market. So they're a bit more willing to do Australian business, which is great. We're kind of getting a few more knocks on the door, whereas in previous years, they didn't want to speak to us as much. But this does, there has also been greater scrutiny on property data now that there are a lot more tools out there, AI, different technologies, scanning, surveying. The want for more information has increased, especially things like construction details, occupancy types, and catastrophe exposures. There are some insurers who are adjusting deductible structures so that they have that extra level of comfort, but they are also requiring stronger risk management evidence. So as brokers, we just need to make sure that our submissions are complete, getting as much information from clients as possible, making sure that information is accurate, so we're presenting the right details to the market, but also supporting them with mitigation details to secure the best terms.
And Jodie, what about you? Have you seen any changes to property policies?
I very much agree with Melissa's points, so I won't go over those again. But what I've also noticed since the previous property panel in May is that the signs of the market softening have been reinforced by insurers. So earlier in the year, when we'd start discussions with incumbent insurers, majority of the time, the broker was the one initiating the conversation to say, we expect favorable terms because we know the market is shifting. When we were going through the 30 June renewals, insurers were the first to comment that the market has moved to a soft market. They were embedding this in their conversations and actually asking how they can partner with clients.
Let's get out the crystal ball for our final question and try and sort of see what's coming down the track. As brokers, what do you see as your main challenges in the months ahead? Jodie, let's get an answer from you on that.
Whilst brokers might get favorable premiums and terms for their clients, they shouldn't underestimate the amount of time they'll need to complete the renewal process. Despite the softened market, insurers are seeking detailed renewal information to understand a client's risk profile, where they're located, what type of construction it is, what the use of the property is, then their risk mitigation strategies, claims histories, and for clients that have had claims, what have they done since to prevent it from occurring again in the future? This information takes time for clients to put together and for brokers to collate into a good submission for insurers to review. Additionally, with so much remarketing activity going on, insurers are likely to be experiencing high workloads, and the time they need to turn quotes around may not reduce now that we're in a soft market. So my message to brokers would be to plan in advance and give yourself plenty of time to get things across the line.
And Melissa, where do you see your challenges in the months ahead?
Even though the market is softening, which is great, from a broker and client perspective, I guess people's ability to pay the premiums has become more challenging because businesses are experiencing more expenses, whether that be, from utilities and everything, but also with the labour shortages, maybe they're having to pay higher wages to get additional staff in. So I guess one of our big challenges is navigating the ongoing affordability pressures that we're receiving from our clients. Even though the market is softening, everyone's wanting lower premiums at the moment, which totally understandable. So it's juggling having that affordable premium, but still securing adequate cover. So we don't want to be cutting out, certain limits or sums insured to get the premiums down. We want to maintain that high or comprehensive coverage, but also for a good price. Also, managing insurer appetite shifts. Some of them are jumping into newer risks. We're not seeing them jump out of things so much. That was over the past few years. If they didn't want to write business, they pulled out. There are a few that are creeping back in and doing more things, which is great. So I guess us just as brokers giving them that feedback, saying, come on, insurers, help us out, like start writing this more challenging business again. So it's just giving insurers that comfort that they can write it and it can be a profitable portfolio. In WA, our regional areas and high catastrophe postcodes are still challenging. So whilst insurers are coming back in certain occupation classes, the 26 parallel will always be a challenge for us. So as brokers, maintaining the value that's telling clients early engagement, giving them as much risk advice as possible. If it's fire protection, burglary, security, things like that, that will help reduce those premiums, and just being as clear with our communication with clients as possible. As Jodie was saying, managing expectations and avoiding any of those last minute surprises.
Thank you, Melissa, and thanks, Jodie. And that wraps up our Property Power panel on Insurance Business TV. Thanks for watching. Bye for now.